Perhaps you're totally new to the term imbalance zone in the market, and perhaps you don't even know how to find or mark on your chart. So that's exactly what I'm going to share with you today, how to find those zones of imbalance and how you're actually going to mark them out. Now we're on the EURUSD pair currently on a weekly time frame. But listen, whatever time frame you do this on, it'll be the exact same process. Now the actual imbalance zone, let's just do a quick sketch of it. When we see the market pushing higher and we see the drop and we see a continuation, this is basically where we are going to see that break of structure. Okay. If you're not sure about market structure, there's a full playlist. You'll find that on the channel homepage. Go through every video on market structure because it's going to help you to understand how we look at market structure and how you can apply the imbalance with market structure. So in this move here, what we're going to find is normally this is going to be an explosive move from this higher swing low in the market to break this structure. Now, very often you're going to find an area of imbalance is right at the breakout point, and we can find an area of imbalance can be formed there where we can see the market pull back down and continue off. Now, why does the imbalance form at this breakout? Because the banks, institutions are going to pump those orders in to break that high, and they also know this is where we're going to have support and resistance traders trading here, and when the market comes back, that's the area where they know they can manipulate those traders out of their positions at this area of imbalance, and that's where you tend to find a sweep into that imbalance where you can look for those trades. So the imbalance can form at that breakout point. The imbalance can also form from the move where we see the origin, okay, is forming an area of demand. Okay, in this situation, we can create an area of imbalance. And the imbalance can also be created after the breakout. Now, when we see an imbalance being created after the breakout up here somewhere, unless we have a really strong trend in play where we can see the market pulling back, continue off very, very quickly, they are not the best zones for you to trade. The reason being, we want to see that pull back, okay, to a good area for continuation. Now, when we're looking for trades, understanding the pull back into these areas of premium discount, that is how we look for that. And that's going to be in a different playlist series. So the imbalance zone itself, the way we create an imbalance zone, we just draw a couple of potential candles. So we can see the move away, okay, like this, a big strong move away. And obviously, I'm not going to draw here the wicks on the chart, but what we'd actually potentially see is a leftover area here between the high to low of that candle, which would create that area of imbalance. And that's exactly where you look for the next candles to pull back into that imbalance zone, okay, and you're looking for a potential trade out of that imbalance. That's a quick sketch just to show you the actual process of the imbalance zone itself. The imbalance will be between the high of this candle here and the low of this candle. That is how the imbalance is going to be formed. Once you have the close of this candle, it will form your imbalance left over. Inside this imbalance, you're going to have orders left at the high, the low, and the bottom of that end zone, where you can find the market come back to hold at the 50% normally for continuation back to that direction. Now, if you're in a bearish market, okay, again, you'll be looking at just the opposite thing with that imbalance zone. Now, we'll look at some examples on the chart as well in a second, so you can see how all of this is going to look. Hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. Just remove all that. So if you want to go through that sketch again, obviously you can just rewind this video quickly. So we're looking at this market, zoom out. We can identify that we've been in a bearish market since we saw the shift, went bullish. We failed to run this high. We then made a market structure shift of this low here to downside. Okay. Once you've seen the break of this low, that is then putting us into a bearish bias. But let's look at this area where we see that reversal, looking for those imbalances. Okay, we'll start here. We can identify we have this break to this upside. What did I just go through and say where we can find those imbalances? We can find the imbalance, okay, from the low of the move where we see the breakout and above that breakout, okay? At this point, we can identify the first area of the origin move comes from this area of imbalance. That's where we see the imbalance being drawn from the high of that candle to the low of the next candle. Let's go closer in so you can see exactly where I've drawn it from the high of this candle and the low of this wick of this candle. That's where we draw the imbalance. We have in here this bullish candlestick. This leftover area of this bullish candlestick has not been tested into. That's where we have buy orders left over in the market. So that's that first area of imbalance. The next imbalance you can draw is the breakout imbalance, which would be this zone here. That we've just come to this example. I haven't cherry picked this. We've just come to anything to show you how this works. So we can look for potential bounce off these imbalances. Again, like I did say, we can see them bounce off the high, the 50%, and the low. This video is really just to teach you how to find those zones and how you look to actually draw them out on your charts as well. So here we can identify this imbalance actually holds until it's closed through on this bearish candle. Now in later videos in this playlist, we'll go through how you can use the imbalances for directional bias, how you can use the imbalances when you're looking for the breaker structure, and how you'll be able to look for what I call the pre-imbalance zone. So keep watching the rest of these videos in this series to understand how you can use imbalances. Now, if you're enjoying what you're seeing on this video so far with the imbalances and how you find and draw them, then drop me a comment to let me know that you want to see more videos on imbalances to help you to really understand how to trade them. So right here, once we see this shift through, and when we see a reversal of an imbalance, which we're seeing here, very likely that's going to create what we class as a new imbalance. And that's what we have here. We have this new imbalance formed, okay? So you can see this imbalance was formed on the break of this imbalance. We then also closed through this imbalance. We held and we closed through with this candle. What does that create? That creates a new imbalance. Remember, we can draw the imbalance zone from the low of this candle on a bearish move, what we do here, and the high of the next candle. So the bearish candle here and here, we have leftover orders. Now, either these orders can be pushed back into and they will be triggered to push the market lower, or they can be pushed through. So we can see here we've pushed through. Now, if you're not sure about the idea of imbalances, look at it as a solid bearish candle, bullish candle. That's where you're going to find those imbalances. So we can see that we closed through here. And as we do that, we create this new imbalance. We have a bullish imbalance to the upside. Again here, look, we push through this bearish imbalance and we create this small bullish imbalance. Now on this imbalance, we don't come back into it. This one, we pull back into the imbalance on the lower time frame. That's how we can look for those entries. Again, later videos in this playlist will go through all this and we push higher. So this imbalance is then actually closed through with this big bearish candle. What does that create for us? We can draw a new imbalance zone. So you can see we can draw this new imbalance zone once we close through this imbalance. Now we have this imbalance that we had drawn. Now on this occasion, we just closed through this with this smaller candle. Now we don't actually make a new imbalance this time, but we've created the imbalance above. We look for the market to come back into. Now it doesn't actually pull back into that imbalance. So once again, look, we have this area created, an area of imbalance to the downside. This suggests the market's going to be bearish here. So we know the market's going to continue lower. Again, we can see the big bearish body of that candle, and you can see a new imbalance is formed in there. Price comes back into that zone, the full fill, and then we continue to drop lower. Once again, we then have this as a breakout point. Like I suggested, this is our breakout. We're breaking out here with the imbalance zone. Again, here, look, the breakout point is when we see the creation of this imbalance zone. This is what we class as the origin imbalance. This is the breakout imbalance. And this is also where we're going to see the support and resistance traders. In this case, it's an area of support broken, acting as resistance. So that I can mark this right the way across. This is where you're going to find those support resistance trades looking for trades, and they're going to get manipulated out because we can see a sweep here above the high of that candle. Now on the lower time frames here, the 4 hour, even lower, you're going to see those sweeps, manipulations to take them out of their trades. So again, that we have a breakout candle. What does that create? Again, it creates the area of imbalance that you can draw in the market. And we have the imbalance drawn again on this big bearish candle. So when you're looking for those zones to mark them out, okay, that's what you're looking for. You're looking for the large momentum candles. We have that as the breakout candle. Now, what did I say at the beginning of this video? If we create an imbalance zone away from that origin move, this has been the origin move, this is a breakout point, you don't really want to be trading off these zones because these zones are not going to be your best zones to trade from. And if we just drag that across, you can see it actually gets closed through and it's not even really respected. So this is the best zone, okay? The one which is the breakout area or the one from the origin move. Now in this case, we don't have an origin zone, so this is the breakout zone. You can see price actually comes back and we actually have a manipulation within that zone at the 50% of that imbalance. Now, in many other videos, you'll learn more about using the balances. Really want to just show you how those imbalances work. Now, we do have another breakout here, but we don't have an imbalance zone. We have that big bearish candle, but we don't create an imbalance zone. Now, later on, you'll understand about the pre-imbalance zones. You'll find out in a later video within this series. And this is actually a pre-imbalance zone. I'm not going to draw, I'm not going to show you what it is, but if you watch the rest of these videos in this playlist, you'll understand what the pre-imbalance zone is and how you can use that as well to trade. So there is an imbalance zone here you can look to trade. It did work, it did its job. Again, look, we have another continuation lower here. We have a breakout. We leave this imbalance again. So the imbalance, remember, is drawn. Looking at that big bearish candle from the high of that candle. Once this candle here is closed, this indecision candle, that's where we can mark out the new imbalance zone. And like I said, we're looking at the low, the 50%, and the high of the zone to be used where we can see that reaction. In this case, we fill the full high. We do not close through. Okay, we hold here. There's some trades you'll be able to find lower time frames, target the lows, or some trade you'll be able to find, understanding imbalances in the market. So again, look, we follow with the trend. The trend is bearish here. We have another breakout to downside. Now, before that, I believe we leave a very small imbalance here in the market on the way down. Now, you're going to probably find that more on the lower time frames, but it does its job, holds price and pushes price down. Again, we can mark on this big bearish candle a new imbalance zone. And what do we see? This is how accurate imbalances will be once you start to understand them. We pull back to the full fill, okay, of this move to the high of that zone, and we then continue on to break structure, head to downside. There is a small imbalance at the origin zone. This is our origin zone. This is the imbalance at the origin zone. Okay, remember we draw at that big bearish candle, the low of this candle, the high of this candle creates that zone. Price comes back, holds, and we continue to push lower. We then have another small break here. What does it create? Again, that becomes the breakout and the origin zone of the imbalance. Now, on this occasion, we do hold. We failed to run this low. Okay, this low here is not run. If you want to learn more on about using liquidity, there is a playlist on liquidity in the channel as well. That's going to teach you about highs and lows and how you can use liquidity to understand where the market's going. So this becomes a lower high with market structure shift head to the upside with this current candle. So this becomes a new origin. This is a potential breakout. Now we can't have a valid breakout until we have the end of the week. So at the moment, this candle would need to close like it is to form a breakout and a shift. Now on the way up, we don't have any imbalances that we can draw. So we'd have to wait for the next candle. Let's say this candle closes like it does. We have another bullish candle like this to the upside. Hopefully you can see that on your screen. That's going to create a new bullish imbalance. And then we'll be looking for potential pullback to hold at the high of the imbalance, the 50% of that imbalance, and the low of the imbalance. So that's simply how we look at drawing the imbalance, how you look at using it in trading with, I've just gone through showing you the breaking structure here. Again, more market structure you'll find in the other playlist. So if you want to join that absolutely free community where I actually post my charts of the USD, there's going to be a link. It's going to be coming up next. And if you want to follow on with more about using imbalances to the next section, where you can actually find how you can use it for a directional bias, then check out the video what's coming up next.